Hello students and welcome to this third explanation on contract costing. I do not know how to pronounce this name, so I'm going to call it L Project. And the question reads, L Project started working on a contract on the 1st of April 2015. That is dangerous to start working on April's Fool's Day. The contract price is 10 million and the target completion date is the 31st of May 2016. On the 28th of February 2016, at the end of the company's financial year, the cost accountant collected the following information. And then in the table, you can see that they've given you materials sent to the site, materials returned to the storeroom, equipment sent to the site, materials returned to or transferred to another contract, materials on the site at the end of the year, plant hire costs, some labor costs where they say it was 16,500 hours at 200 Rand an hour. So we can do that calculation to solve this little question mark. There's some direct expenses, cost of work not certified, there's cash received from the client, and then there's equipment on site question mark. So we need at year end to calculate what the value of the equipment on the site would be. In the additional information, they say the client uses a retention rate of 12%. In number B, they say the depreciation is 20% per year on a straight line method. Other manufacturing overheads is 20% of the direct labor costs. And indeed, they tell you that they use the work certified method to recognize their contracts. So number D, they don't have to tell you that because the work certified method is what is covered in the syllabi. So you will always be asked to do this method. In the required part, they ask you in number 1 to do the ledger account or the T account for the contract and then also interestingly in 4.2 they ask you to do the debtors account. We have not looked at the debtors account, but we will also be looking at that one. So we need the contract account and the debtors account, and they've given us all the necessary information. So at this point I think it's starting to get pretty easy. What I am going to do, as always, I'm going to take my template and I'm going to copy it onto a new spreadsheet. And then I'm going to fill in the blanks. So as you can see, contract costing, it's really not difficult. There is method to the madness and you need to repetitively apply the method, right? And please, not the madness. So let's see. If I look at my tables, I'm going to start here and I'm going to fill in basically like a puzzle, fill in the necessary information where it should go, and then we will mind the additional information. Right, so starting with the material sent to the site. So it was 2.6 million. Then we have materials returned to the storeroom. It was 25,000. Then we have equipment sent to the site. Please note the date. I am going to catch you with the date because you're going to make a mistake with the depreciation. Please be awake. Equipment sent to the site on the 1st of September 2015. Right, so the equipment value 1.5 million. Let's fill it out. Then we have material transferred to another contract. So that's material transferred out, 200,000. Then we have some material on the site. So that would be the closing balance, 50,000. Then there is some plant hire charges. And the plant hire charges were 400,000. Then we have a question mark at the labor cost, but we can calculate the labor cost because they tell us it's 16,500 hours and each hour was worth 200 Rand. So tada, 3.3 million. Then we have some direct expenses. That was 80,000, I believe. Then we also have some cost of work not certified. So the uncertified work is going to go here, 380,000. Then we have cash received from the client. That will, of course, be the debtor part, the certified work by the debtor. Here, ladies and gents, we need to mind the retention rate. We need to divide by 1 minus the retention rate. So if I look at this question, the retention rate that was given is 12%. So the amount paid should then represent 88% because we want to invoice the debtor at 100%. So we're going to divide by 1 minus the 12%, which is 88%. So it's 0,88 that I divide by here, and that gives us 8.6 million. Then moving on, we need to look at the equipment at the site. There is a question mark for the closing balance of the equipment, which means that we need to go and calculate some depreciation. Right, so the depreciation we are told is 20% per annum. So I'm quickly going to just do my calculation here. I'm going to say, so the equipment has a value transferred to this site for the contract of 1.5 million. Then we need to go and calculate the depreciation. So the depreciation will be based on the 1.5 million times the rate given, which was 20%. And then we also have to go and mind the number of months. So if I go back to the question, they say we use it from 1 September and the year end is 28 February. So it's going to be September, October, November, December, January, February, March. So February is 6 months, right? So it's going to be September, October, November, December, January, February, 6 months. Right. So I'm going back to calculate that, 6 out of 12, and I get depreciation then of the 1.5 million at 20% times 6 out of 12, and that gives me 150,000. And then the carry value of the equipment at your end will be the difference, which is 1,350,000, and I'm filling it out. Great. Then let's see what is more in our additional information. What I also see in the additional information is that we have other manufacturing overheads, and they are 20% of direct labor. All right, so what was the direct labor again? It was the wages, 3.3 million. So the overheads, where are they? Should be the 3.3 million times by the rate given, absorption rate given of 20%. 660,000. All right, let's see. Was there any other information that we maybe have missed? It seems not, so we can go ahead and calculate our balancing figure. So I'm going to get the sum of everything on the debit side. And then it has to be equal to, the credit side is equal to the debit side, and then we find the balancing figure by taking the total minus everything on the credit side. And I get an amount of 6,535,000 for the work certified, cost of work certified. Please remember the double entry, so the amount needs to go there. And we need to calculate our profit and loss. How do we do that? We have a formula for it, all right? So the formula is 2 out of 3 times the debtor amount minus the cost of the work certified. And we're going to times that by 1 minus our retention rate. Retention rate, if I can ever spell correctly. So 2 out of 3 is standard. I did not calculate it. It's a standard part of our formula. Then I remember the amount for the debtors certified work was 8.6 million. We're going to minus from that the cost of the work certified, and I believe we calculated that to be 6,535,000, and we're going to times it by 1 minus our retention rate of 12%. So it's 2/3 times by the difference between your debtor amount and the work certified. If I type that into my calculator, I get 2065000 times by the 1 minus the retention rate should be 88%. And if I now type this into my calculator, I get to a profit of 1,211,467. Please note it's 666. However, the question tells us we need to round to the nearest rand. So that's what I have done, and then I'm going to fill it out. So there it goes to the profit. Now we only need to get to a balancing figure, which is the contingency amount. So this should be equal to that, and this balancing figure will be equal to that, and then we will say this total minus the two listed gives us our contingency amount of 8,535,333. Right, great. So that was how we would have approached our calculation as it relates to the contract account ledger. They also ask us to do the ledger account for the debtor, which is very, very easy. I'm just going to copy this so that I have a layout. And of course, this is now going to read debtor account. Then I'm going to delete all of this so that I have an empty T account. Right, let's see what will go into the debtor T account. Well, we will have here on our amount for the invoice. So it's going to be on the debit side where the account increases, the 8.6. And this we will simply call contract account because the double entry lies here. Right? Then on the credit side, we're going to have a bank entry. And the bank entry will be the amount that we actually received. So if we go back to the table, what was the amount that they really paid us? Cash received, it was this 7,568,000, and that's going to go into the debtor account next to bank. So it is 7,568,000, and then we have our balance, and this will have to balance out, of course. So this is going to be equal to 8.6 million, and the difference will be our balance. $1,032,000. All right, so that's how you show your debtors account. So you show the full invoice that is owed, and then the bank amount that was really received, and the difference is the retention money, basically, and we call that just balance brought over. All right, so this was the third question relating to contract costing. Again, if you use your template, you should not have any problems, but feel free to let me know if there is anything that you require clarity on in terms of this explanation. And then I will see you guys in class.